Well, still staying actually with the matters banking, that the Kenya Bankers Association Chairman Lamin Manjang says that the push towards repealing the capping interest rates is not likely to affect customers, as it has been peddled by different quarters. He spoke to KTN Business Today, citing interest rates would be pegged on key market fundamentals as opposed to the current plan. Well, we had an earlier interview with him, and here's more. Well, we have with us the Regional Chief Executive for Standard Chartered Bank, Lamin Manjang. And a lot has been said about the rate cap. We now want to hear it from the chairman as well of Kenya Bankers Association, who is here with us. Perhaps, what is your take on the government's position on the rate cap? There's talk around reviewing it and changing the framework. What do the bankers want?
Well, as far as the interest rate cap is concerned, I think the banks have expressed concern about the impact that this would have on credit growth in the economy and that the impact that it would have on the banking industry. I think all those fears have come to pass. And today we are in a position where the devastating impact of this on credit growth is apparent, is very clear for everybody. Our position as a banking industry is that the interest rate cap should be removed so that we go back to... Completely?
Repealed.
Repealed.
Okay.
So that we go back to a system where interest rates would be market-driven. I think that system has actually stood Kenya very well over time. It's not as if we haven't been through a cycle or a phase where there were price controls on interest rates, price controls on foreign exchange, and so on. We've gone through that era, and we've seen the impact that it has had. We believe the free market would be better. Obviously, a free market is not unfettered. There has to be controls. There has to be consumer protection. There has to be transparency. And I think these are the areas where the government should come in to ensure that you have a level playing field and that the customers are protected. Obviously, there are other areas where structurally efforts can be made to make sure that the cost of credit overall is brought down in the economy. And that requires partnership between the banks, between the judiciary and other arms that will ensure that, perfection of security, foreclosure, all of those things that somehow lead to inefficiencies and therefore get built into the price are addressed in a very structured and in a very constructive manner.
All right.
So our objective is to make sure that rates are affordable and that credit is accessible to our clients.
So if this rate cap is repealed, where does this leave the average Kenyan borrower who is already paying an interest rate of, say, 12–14%? Will the repeal take the rates back to market rate? Will they be affected, or will banks be considerate?
Well, I mean, obviously, once you remove the cap, I mean, banks will respond in different ways. We're not a cartel as a banking industry, so we do not sit down to determine what the price would be or what the interest rate would be. Each bank makes their own decisions. My expectation, though, is that banks would act in a very responsible manner. Obviously, it's not in our interest to make sure to see rates in an unsustainable manner, which then leads to credit defaults. Because if you price it so high that the customer cannot pay, obviously then it leads to a credit default. So we do want rates that are, affordable, and that people who want to borrow are actually able to access those credits. But I think that should be done within the context of a free market where rates are determined by market forces.
All right. Are you saying that the Wanjikus, the Ochiengs should rest easy?
Well, I think in the end, we have to really realize what is in the long-term interest of our borrowers and for the overall economy. If you have a cap, and irrespective of what it is, whether it's interest rate cap or foreign exchange rate cap or commodity, somebody might decide to, control the price of sugar or flour or whatever. Whenever you have price controls, it leads to a distortion in the market. It leads to, artificial, shortages, rationing, etc. So we don't think that is in the long-term interest. Of course, in any system, there are some who benefit in the short run, and they might see it from their perspective. But really, one needs to look at this from a broader perspective. What is in the long-term interest of Kenya? It is to have a free market, but one that is obviously regulated in terms of ensuring that there's a level playing field.
All right.
There's transparency for the customer as well.
Okay. Many thanks, Lamin.
Thank you. Thank you again.
Let's see how the government takes it up.
Okay, thank you.
Well, that is our exclusive interview with the Chief Executive Officer for Standard Chartered Bank, Lamin Manjang, just commenting on issues to do with the rate cap and how the bankers want things done. That's where we leave it at here on this show.